Thank you so much, Jake, for joining in for once again. And it's always lovely having you here in my show. And last time also, you explained very nicely about some of the great features and how do you look at the charts. And whenever I put any chart which are of TrendSpider, the most number of questions that I get is that what are those horizontal lines? What is the actually what volume shelf and how to use it? So I thought it would be much better if I ask to make you a video, or if I ask you to explain it, it would be much better. So can you just
Sure.
make go through like what is actually a shelf, how to use it, and if there are any scanners also that we can use, that would be great.
Yeah, absolutely. I will be happy to go over the volume shelf. Let me just share my screen here
Yeah, I'll
in a
just make you the
second.
host. Yes.
And yeah, so essentially the volume shelf is a part of the volume by price. The volume by price is looking at volume as a function of price, not time. So I'll go ahead and share my screen and kind of explain what I mean by that. So essentially, when you're looking at volume, there's two ways to look at volume. You can look at volume as a function of time, that being down here. So if you guys can
Yes.
see this arrow that I just created, these are volume bars looking, and we're on FedEx right now, but these are volume bars that are looking at each day and how has the volume come into to play each day. So it's measuring each day's volume essentially. Now there's another way to do that, and that's actually measuring the volume as a function of price. How many shares are holding at a specific point in time? And so the way to use this is really looking to see where is volume aggregating and where are a lot of shares kind of holding. And these are called break-even zones. So I'll go over a quick example on ATVI. This was kind of a textbook case study here. And there are two variables to this equation. So let me just turn off the volume because we're not going to use that now. We'll just focus on the volume by price. And the thing that I want to mention here is you want to anchor it from swing low and swing high points. So generally, I'm looking at a swing low or a swing high here. In this case, we're looking at the capitulation point on ATVI back in November of 2019, November 9th of 2020. And you'll see here, this was pretty much the candle where everybody who was long capitulated, they stopped out for not everybody who was long, but those that had weak hands capitulated and just sold. So from that point on, that's kind of where the status quo changed. That's where the trend reversed to the upside. We saw higher lows since that point in time. And so that's where I want to see where are a majority of shares holding since this status quo, since this trend changed in the market. In this case, in ATVI, it was on November 9th, and we can see what happened over the next couple months was this massive area of volume holding right at this area. And so I personally like to use the anchored VWAP with the volume shelf. So what I did here was you can essentially see that we broke out of this previous horizontal level. And then when we finally broke out, that's where I anchored the VWAP from. And you can see how well that acted as a level of support. Even though price was breaking down through this shelf, it did catch right at this anchored VWAP from that breakout. So same thing, we're anchoring the VWAP from the status quo change, which in this case was the breakout from this horizontal level from October of 2020. So what happened was the price was able to really catch a bid here. And a lot of people think that, you know, price has price has to bounce because buyers come in, or price has to drop because sellers come in. That's not always the case. If you look at this area right here, this shelf of volume was showing us there were a lot of shares holding here. So as the price is pretty much trading at this area of volume, all of these shares are at break even. So if you're holding at break even and you have a plan in place that you think it's going to go higher, why would you sell? And that's what a majority of people that are holding in this area are likely also thinking. And so as the supply dries up, i.e., as more people stop selling, that allows price to catch a bid, not because necessarily buyers came in, but because selling is drying up. So if you are familiar with the supply and demand curves, you can have an increase in price without any type of increase in demand. You simply just need the supply curve to shift to the left and decrease volume or quantity supplied. And so this is something that's really important because a lot of people think, you know, buyers have to come in for price to bounce on specific areas. And it's more or less supply generally is drying up. And that's exactly what you see at these volume shelves where you have a lot of shares that are break even. And then when all that supply dries up and you have any slight uptick in demand, that's when you get this move off this volume shelf. And I like to call it a launch pad because it's essentially creating a base for price to move up off of. So this is an example using the swing low. Now I do have a scanner in TrendSpider that really focuses on the swing high. And so we can go over that here. So what I've done here is let me maximize this so you guys can see a little better. I have 4 different variables. So I have 2 variables that are really looking at trend. And you'll see that here. You'll see this orange line here is just the SMA 5. So pretty much the weekly SMA needs to be increasing. So you can see here daily SMA 5 has increased. So that's one variable that we're looking at in this scanner. Second one is the price is greater than the SMA 200. So overall, the longer term price action is bullish against the simple moving average 200. So these are more looking at trend and just looking at stocks that are uptrending. Now, the second half of this is looking at the anchored VWAP and the anchored volume by price. And so let's go to FedEx right here. Here's an example here of FedEx. And let me make this a little smaller here so you guys can see the chart a little bit better. So let's check these boxes off. This is the SMA 200, price is above it, so that's a check. The SMA 5 is increasing, that's a check. And then the other 2 are the volume by price over the last 15 days is trading. The volume by price over the last 15 days is pretty much anchored from the highest high. So if we go to, I have the manual anchored VWAP here, but if I change this to the highest high, and that's pretty much our swing high. That's where the status quo changed to the downside. And we click apply, you'll see this is pretty much what we get. We have the volume by price starting at this swing high. And you can see here, we've got quite a range. We have from around 300 all the way down to 240. And we can see from this area, and this is actually something that popped up on the scanner, we can see that since this period in time, we have a lot of volume holding in this 250, 255 area, which is pretty much the point of control, but it's also a volume shelf because you can see that it's not just one volume node, right? The point of control is really just the biggest volume node here, which would be this one right here. However, we have multiple volume nodes that are creating this base for price. So you can see here that we've got 1, 2, 3. So this is why I call it a shelf, because it's not just a point of control. It's actually a group of increments of volume that are really holding. So in this case, we have the SMA increasing. We have the price above the SMA 200. We have the anchored volume by price from the swing high, and we can see that the price is starting to base here, possibly even on at least FedEx, creating kind of this kind of unconventional inverse head and shoulders here. But, this is what I'm looking for. I'm looking for price to base. I'm looking for shares supporting price at this current area. And we know a majority of shares that are holding here are holding at break even. So all we really need is a shift in the demand curve to really get this going, because supply is clearly drying up here. As you can see, it kind of consolidating down here. So the last thing I really want to look at is I want to look at the swing high Alpha Trends anchored VWAP as well from this same point. So you'll see this anchored VWAP is starting at this same point. I want to look for things that are below that anchored VWAP, because if it's above this anchored VWAP, the move has probably already been made. So the last variable that I'm looking at is this anchored VWAP from the highest high, and I'm looking for the price to be below it. And so in this case, that's exactly what we have. We pretty much have a really ideal setup here. This is kind of, something that I would probably turn on the raindrop for. Notice how we have this wick here. So I would want to see if there's actually volume supporting price within this wick today before I got too excited. And let's just turn on the raindrop and see what's going on there. In this case, it's supporting price at the range, at the top of the range. So let's zoom in a little bit. You can see here that even though we just highlighted this wick, look at all the volume that's actually aggregating at the top of the range here. So that's telling us that what happened is, and this goes back to the supply and demand curves. People look at a wick, especially, a wick on the upside, and they look at a wick and they say, well, sellers came in and pushed price down. Well, that's not always the case. What I likely am thinking is happening in these cases here. So here's the raindrop. We're going to do the hollow candle here on the other side. And let me just optimize the chart a little bit so everybody can see it. So we've got the raindrops on the left, the hollow candle on the right. And you can see here within this wick, a majority of volume has been aggregating at the top of the range. That means that there's conviction by buyers because, in order for volume to stick at the top of this range, buyers need to be absorbing that supply for the volume to read at that level. So what's likely happened on FedEx, rather than sellers coming in and pushing price down, what likely happened today is a bunch of aggressive buyers came in pushing the price up. And once those buyers were done buying, whether that's an institution or, a group of institutions just buying at the market, at pretty aggressive rates, once they're done doing that, the price is going to drop, not because sellers came in, but because they shifted the demand curve to the upside. And now that they're done buying, that demand curve is shifting back down to the equilibrium price. And you're getting this drop in price, not because sellers came in, but essentially because those aggressive buyers are done buying for the day. So it's really, really important to understand how the supply and demand curves work, because this allows us to see what's really going on. A majority of people think prices go up because demand increases, or prices move up in general, not necessarily a breakout. A breakout, you need buyers, demand. But just for a simple bounce off a supply zone, or a support zone, you don't need increased buyers. You just need sellers to dry up who are adding to the fuel for that drop. And so, being able to understand the supply and demand curves and how they shift is really important, because if you don't understand that, you may be thinking about the markets in the wrong way. And so this is something I wanted to highlight here with the raindrops, because this does kind of tie into the volume profile as well. If I were to look at FDX, this looks very strong to me. If I had a target in mind, I would look at the anchored VWAP above, let's say around 265, 266. But this is just a great example of being able to see, let's zoom in a little more, this wick, and then looking at the raindrop and seeing something completely different here. So especially anytime you're kind of breaking out through a moving average or an anchored VWAP, I always look to see, what's going on here. Now, there are going to be times where you have a wick and then you have volume at the top and you have a pullback. This is not an end all be all, but it gives you a lot more information than if you were just looking at the hollow candle and just, let's say, the daily volume. So I did want to point that out about raindrops and kind of how I would continue to look at this chart past just the volume shelf scan. Now, going back to the volume shelf scan, this is what I would say probably is a textbook setup. There will be setups that you find that probably aren't as textbook as this. So in this case, if we go to the raindrops here and we turn those on, you'll see here anchored VWAP, anchored volume by price, starting from the swing high. And you can see that we still have, the price below the anchored VWAP, but the move has really already been made. So there are going to be results that come in that probably aren't what I'd call textbook examples of what I'm looking for. But that's your job as a trader and a technician to go through and really choose the ones that look best. Here's another one here, ACN. So if we go here, we'll see. Yeah. So, here, same thing. We've got the and sometimes when you're looking back 15 candles, it's not always going to look back the full 15 candles. Sometimes it's just going to look for the highest high within 15 candles. So in this case, this is only about 8 or 9 candles here, but you can still see the same thing. You can see that we're anchoring that from the swing high. You can see that the volume is really forming a base here. This is one I'd probably pass on just because the move's kind of already been made. CHD, I have no idea what this company is or what they do. However, this is a pretty textbook setup. We're right along the simple moving average 200. We're right below this anchored VWAP from the swing high. We have this massive volume shelf forming here. And to me, this kind of tells me that this could be a potential move to the upside. So this is how I like to use the scanner. I personally am generally trading the same stocks over and over again, rather than just looking for a random stock. So in this case, I probably wouldn't take this trade because I'm not familiar with how it moves. I'm not familiar with the spreads. I always like to say if you're trading a stock, look at it as like if you went to go play poker at a casino. You're not going to go play poker at a different poker table every game because you're going to have no edge learning about the participants at the table. It's going to take you probably 5 games just to figure out some of the bluffs that people are doing, some of the ticks that they have when they're bluffing. And so that's why I stick to the same stocks over and over again. Or if I do have a stock that I'm looking at entering, I'm watching that stock for like 2 or 3, at least 2 or 3 weeks, sometimes 2 or 3 months, just to get an idea of the price action, how it moves. Fubo is a good example of this. I've been watching Fubo literally now for about 2 months, waiting for an entry. And then finally, yesterday, I got my entry. Fubo is a great example of being able to use the volume shelf for an entry here. So I'll go over this real quick. In this case, I actually used the anchored volume by price from a little further out. So I anchored it from the start of this symmetrical triangle. So we can actually kind of see the volume profile of this symmetrical triangle, which is pretty cool. You can actually see what's going on within that pattern. And what happened was we pulled back right to this volume shelf. That was a big thing for me to enter. And then I entered yesterday at around $31.25 cost average. And I bought a pretty big position because I've been watching this for so long. I had the conviction that I was ready to
I
absolutely
saw that
just,
tweet also.
buy
Yeah.
when the time was right. And so we'll see what happens. We're still within the symmetrical triangle. We're right at this resistance line. But for me, that was a solid entry because we were right at the volume shelf. One thing I'll mention here, and this is important with the raindrops as well. You'll notice here. Let me just turn off the 5 and the 200. It's kind of polluting the chart a little bit. So here you can see. Let me just delete this. We had this green raindrop, but if we go to the hollow candle, we actually had a red candle. So anytime you see a discrepancy between the raindrop and the candle, I'm always looking at the raindrop to kind of have more conviction. So if there's a green raindrop but a red candle, I'm looking at that. Rather than if there's a green candle and a red raindrop, I'm looking at that as kind of a little bit of a maybe not. Maybe not time to jump into that yet. So anytime that I see this discrepancy with a green raindrop and a red candle, I kind of look at that as some type of divergence. And if you do want to learn more about raindrop charts, I think we've done a video on raindrop charts in the past. So make sure to check out that previous video. And if you are looking for more information, just type in TrendSpider raindrop charts into YouTube, and there's a lot of information there. So this video is definitely supposed to be mostly about the volume shelf, but I think it's important to know that there's other variables in the equation to use when you are looking at the volume shelf, like the raindrop charts, which are also a volume-based indicator, which help you kind of get an idea of what's going on. So if you do want to try out the volume shelf, it is an actual scan in TrendSpider, so you don't have to go and recreate this scan. Just type in Jake's, you pretty much just type in Jake, and then it will pop up as Jake's volume shelf scan. I have it scanning the S&P 500, but if you have a specific watch list that you want to scan yourself, you just click the drop-down menu, and you can see here, I could scan through my current positions. I could scan through my everyday list that I keep an eye on. So you can scan through stocks that you're watching rather than just scanning for a bunch of random stocks you're not familiar with. So that's definitely something to keep in mind when using this. It is flexible. Let's say that you don't want to scan the daily chart, and when you're using this volume shelf scan that I've created, you can go into these 3 dots right next to save and click. Sorry, not next to these 3 dots. Under script actions, and go to select all time frames, and you could do this on the weekly chart. So then all of these time frames change to weekly, so you don't have to go in individually and add the weekly time frame. It will automatically do that for you. So let's say that maybe you're a day trader and you wanted to switch this to the 5-minute charts. You can use the volume shelf scan in the 5-minute charts by simply going to script actions, select all time frames, and then choosing the time frame you want to scan through. So this is something that's publicly available once you become a customer on TrendSpider, and definitely something that is very powerful and allows you to remove some of that work that you're sometimes doing manually and let the system do it for you.
Perfect. And there's a stock which I was like watching it today itself. It's Run, RUN. So can you just
Run,
look at
yes,
that?
yes,
Because it gave a breakout test today. So maybe if that's supported by
beautiful.
volume.
Yep. So, we could anchor this from a few places. This would probably be the textbook place to anchor it from. I would probably anchor it from this pivot here just because it's a little more, consistent. Now, one thing you'll see is when the price is below this shelf, it's going to initially act as a supply zone. Because remember, if you bought in Run at $91 and you just dealt with a drawdown all the way to $80, as the price gets back up to where you're back to break even, you may sell, break even, sell, and move on. However, a lot of the time, these actually create initial supply, but then they become a really big base for price to move up off. BYND is a good example of this over the last couple of weeks. If we anchor from the swing high here on BYND, you'll see that the price initially was below this shelf. And then as the price started to move through, it initially was a slight area for price to slow down a bit, but then it just moved right through right up to the next volume shelf. So you can see that this volume shelf then acted as a supply zone. Price is trying to catch a bid. It's kind of flagging here. And so that's something to keep in mind when using this. Just because the price is below the volume shelf, it will initially be supply, but as price starts to, digest some of that supply, if you have an uptick in demand, it's going to move pretty quickly. So definitely a nice eye on Run, Harneet. On top of that, we do have on the raindrop side of things, you can see there's a lot of volume aggregating at the top of today's range.
Right.
And so if we draw a trend line here, we can see this is what I'd call balloon breakout. A lot of volume confirming price action above this resistance line. And this shows that there's conviction by buyers. So definitely a great eye there in catching that.
Right.
Any other questions? I think, I hopefully this explanation helps understand the volume shelf a little better, how I use raindrops with the volume shelf, and how you can use Jake's volume scan on TrendSpider to find some of these plays for yourself.
Right, perfect. Because this was one thing, volume share was like each and every one of my friends, each and every one of my followers were really interested in this. So this
Awesome.
topic has been covered now. So I'm glad. So all the doubts are clear right now. If there would be any further doubts, any other doubts, I know whom to contact.
Yes, absolutely. And I'm happy to do a follow-up video if there are any specific questions on this. And I really thank you for having me on, and I look forward to the next video.
So thank you so much. Thank you so much.
Thanks.